Hey guys, it's James and we're back with another valuation video. Today we're looking at Altria Group, or ticker symbol MO, on one of my most recent valuation videos on Procter & Gamble. I had a comment that said, I would like to see your breakdown of Altria and some of these other stocks. So today we're going to be looking at Altria Group, or ticker symbol MO. Right now, Altria Group is sitting around $46.24 with a PE ratio of 17.96, a very decent dividend yield of 8.13%, with $3.76 paid out annually to the shareholders. In this valuation video, we're going to do a discounted cash flow model, a grams model, and a dividend discount model. We're going to take a very systematic approach here. We're going to take 10 years of the free cash flow, a perpetual growth rate, discount rate, the cash and debt of this company. For the discounted cash flow model, for grams model, we're simply going to find a growth rate online from analysts, the AAA corporate bond, which is found by a simple Google, and the dividend discount model. We're going to find these three things. Find the dividend payout, the 5-year dividend growth rate, the risk-free rate, or also known as the 10-year bond yield, and then the return of the market. And all three of these things are going to spit out a valuation. We're going to average this valuation, apply a margin of safety, and then compare it to the current price and see if it is an actual buy or sell. So first off, for Altria, coming over to their website, Altria Group. Altria is known for tobacco type products, and there's a few things you'd probably like to consider before maybe investing in Altria. Altria Group does sell a product that is addictive and can be harmful to your health. So why would anybody want to invest in this company? Well, they are changing their tune, and there's a few things that I do want to read off to you here. So Altria is moving beyond smoking, leading the way in moving adult smokers away from cigarettes by taking action to transition millions to potentially less harmful choices. A successful company is always evolving, and Altria represents more than a century and a half of business innovation and sustained disciplined growth. Our family of companies include Philip Morris USA, U.S. Smokeless Tobacco, John Middleton, Helix Innovations, and Philip Morris Capital Corporation. While our companies have evolved over the years, our success is still firmly rooted in our company's ability to understand changing consumer preferences and societal views toward tobacco. Our vision through 2030 is to responsibly lead the transition of adult smokers to a smoke-free future. So what does that mean? If they are selling tobacco type products, how are they going to offer a smoke-free future? Coming over to their products platform page on their trademarked term, moving beyond smoking, we believe reducing harm for adult smokers can only be successful if these consumers find potentially reduced risk products satisfying, a term with wide-ranging definition based on the diversity of adult smokers' interests. Our strategy is to deliver a compelling portfolio of smoke-free products that offers a range of satisfying product choices for adult smokers and to responsibly lead them to these alternatives. So how does this work? Ultimately, it comes down to these three main points: superior sensory experiences and nicotine satisfaction. So they're not taking away that nicotine that is causing you to be possibly addicted to these type of products. They're not taking that away, but what they are taking away, you can find here, they're taking away the negative social aspects of smoking cigarettes, such as taking away the odor, the ash, and the social isolation. So there's a lot more things to read on their website if you believe in what this company is doing, selling products such as smokeless tobacco, nicotine pouches, e-vapor, and heated tobacco products. So that is that for Altria Group. Let's go ahead and go back to our valuation model. So taking a look at the past 10 years of free cash flow, and currently in 2022 we see that they are slated to hit around $7 to $7.5 billion of free cash flow in 2022. So once those numbers come out here for 2022, we possibly will do a reevaluation. But here's what their 10 years of free cash flow look like, and here's what it looks like on a graph, you can see some drop off in 2016 and 17, but ultimately it has trended in the upwards direction in 2021, and do recall that in 2022 there's going to be a slight tick downwards, but still probably going to maintain their high average growth. Averaging their growth over the past 10 years, they're averaging about 12.7% average growth annually. Perpetual growth rate for a tobacco company, I went ahead and put it at a 0.5. Discount rate typically around 8%. Total cash and total debt of $2.48 billion, $26.29 billion. So where am I finding the free cash flow numbers? Well, if you come over to a website such as Macro Trends, Altria's free cash flow, come down here and they have their cash flow numbers, $3.761 billion in 2012 all the way to $8.2 billion in 2021. That's where I got these numbers. The total cash and total debt numbers, found them over here on Seeking Alpha. Now Seeking Alpha on their valuation tab for MO. Coming down here, we have the total debt and cash numbers. Went ahead and put that into the calculator. Coming down to Graham's model, where am I finding a growth rate? Well, this growth rate right here is projected for over the next 5 years per year, a 4.2% growth rate. You can find growth estimates over on Yahoo Finance for Altria Group under the Analysis tab. The next 5 years per year, about a 4.16% growth. AAA corporate bond rate, you can find that as a quick Google. Currently today it's sitting at 4.51%. Dividend discount model, this is where it gets a little bit interesting. We do know they are giving us an 8.31% yield. So we're going to have this dividend discount model is going to value the stock fairly high, but do recall that they're trying to attract you, as they are to a tobacco company, a company that is selling a product that some people deem a negative product, but as addictive. So they're trying to attract you to purchase shares of their stock. So ultimately they have to attract you somehow, and they're attracting you by an 8% dividend yield. So where are we finding these numbers? First, dividend payout, $3.76. Find that over on Seeking Alpha. For MO, coming to their dividends and dividend scorecard, $3.76 for their annual payout, and their 5-year growth rate is 7.7%. If we would continue to see a 7.7% growth per year on the dividend, that would give us a dividend in about 5 years of between $5 and $6, with at the current price, if the current price remains about the same or flat, we're looking at a 10 to 12% dividend yield. That most likely is not sustainable. For the dividend discount model, I like to keep the 5-year dividend growth less than 4%. So for the purposes of today's video, we're going to take that 7.7% growth and cut it in half. You do have to understand how the dividend discount model works. It works with very good, long, consistent, high-paying dividend companies, mainly the dividend aristocrats and dividend kings. But when you have high dividend growth numbers, 7, 8, 9% dividend growth numbers that are unsustainable, it does tend to give you a negative number. So moving on, we're going to go ahead and use 3.35%. Let's say in the next 5 years, up to 2027, it's going to grow 3.35% and stay in that 8% dividend yielding range. So since we have a margin of safety here, we're going to say 30%, as we are assuming a lot of things for this company. For Altria Group, we're going to apply a higher margin of safety for this one. We'll go ahead and evaluate and click go. The discounted cash flow model values Altria Group at $144.42. You can see with this 12% average growth per year, if this does start to slow down, we will see this number obviously come down a bit as well. Graham's model values Altria Group at around $27.98. And remember, Graham's model is based on the earnings per share. And the dividend discount model is valuing Altria Group at around $120.65. This gives us an average valuation of $97.68 with a 30% margin of safety. That gives us $68.38 as our valuation or buy price. Altria's current price is $46.24. The PE ratio is slightly lower than the S&P 500 average, where the S&P 500 average is anywhere from about 20 to 25 PE ratio. Head down into the comments and let me know what you thought of this valuation. If you would like to follow along with these evaluations that I do offer this spreadsheet over on my Patreon. The link is in the description. Also, link in the description, Seeking Alpha Premium. They have allowed me to give you a discount on the first year Seeking Alpha Premium, where you can see a lot of extra values and extra figures. You can see all three ratings, as you can see, for Altria Group, the Seeking Alpha authors, Wall Street ratings, and their quant system, telling you what they think that Altria Group is valued at, if it's a buy, hold, or sell. And Seeking Alpha is allowing me to give you a discount of $39 for the first year, which normally it's sitting around $200 to $250 for the first year, but up until January 3rd of 2023, you can get it for about $39. After that, I think I can get it for you for about $99, and that link will be in the description. So let me know what you thought of this video, and with that, thanks for watching.